Most pitch meetings don't fail at slide 10. They fail before you say a single word, because the VC already decided. There is an invisible checklist. VCs run it the moment you walk in, and nobody shows it to founders. I've built and sold startups. Then I sat on the other side and wrote the checks. I've seen both rooms from inside. I got rejected over and over before I understood this game. Then I became the one doing the rejecting for the exact same reasons. Today, I'm giving you the real checklist, the one that kills deals in silence. 4 items. This is what VCs actually look for. Run your startup against every single one of these before you ever walk into that room. Let's go. Here is what many founders actually spend their time on before a pitch. A beautiful deck, a polished slide, the perfect TAM number. They rehearse their opening line 40 times. They color match the font. They obsess over things that have never, not once, funded a company. Meanwhile, the VC across the table is running a completely different calculation, one you cannot see, one that has nothing to do with your slides. No one tells you this because the people who know it, the ones who have actually sat in that chair, rarely make YouTube videos. The advice out there is built on theory, on frameworks, on what sounds smart, not on what actually happens inside a real investment decision. Deals get killed quietly. The founder walks out thinking it went well. The VC sends a polite pass email 3 days later, no reason given. And the brutal truth? The real reason is never in that email. The deal was dead long before you finished your first sentence in that room. So what are they actually looking for? 4 things, and if you understand them, really understand them, the whole game changes.
Checklist item number 1. And I want you to stop for a second, not just listen. Actually ask yourself this question honestly. If your startup disappeared tomorrow, no money lost, no team affected, would you still feel a hole in your chest, or would you feel relief? Because a VC doesn't just fund your idea. They are betting that you will still be running at full speed in year 4 when everything has gone wrong. VCs call it founder problem fit, but what they are really looking for is a scar. Do you have a real wound from this problem, or just an interest in it? The obsession has to be visible in the room, not performed, not rehearsed. VCs have sat across hundreds of founders. They feel the difference immediately. I sat across a founder once, pre-seed, decent idea, clean deck, but the energy wasn't there. The answers were correct, but the fire wasn't. We passed, not because the business was wrong, because I couldn't answer the one question every investor silently asks: would this person die for this? Obsession gets you through the door, but obsession alone doesn't close the deal. Checklist item number 2 is where many founders bleed out silently.
Checklist item number 2, and this one catches sharp founders off guard. Founders who have done the work, who genuinely believe in what they're building. The question a VC is silently asking is not, is this a big market? The question is, why is right now the only moment this can work? If this idea would have worked 3 years ago, and it would work just as well 3 years from now, that is a problem. Timing is not decoration, it is the thesis. A large TAM slide tells me nothing. Every market looks big on a slide. What I need to see is that the market is already moving, and you are already in it. VCs look for blood in the water, early signals that real people have a real pain and are already reaching for a solution, with or without you. At pre-seed, I am not asking for perfection. I am asking for one repeatable signal, one moment where the market pulled you, not where you pushed it. If you cannot answer why now in 30 seconds, clearly, specifically, without slides, the checklist has already moved against you. The VC has mentally moved on. Obsession, timing, 2 down. Checklist item number 3 is the one that founders almost never see coming, and it lives inside your own team.
Checklist item number 3, and this one lives closer to home than you think. It is not about the market. It is not about the idea. It is about who is sitting next to you. When I look at a team, I run two tests simultaneously. First, does this CEO own the vision so completely that it cannot survive without them driving it? Shared vision sounds collaborative and healthy, but in a startup, distributed leadership means no one is truly accountable, and no one is truly driving. That kills companies. Second test, the CTO. And this is where I see more deals die than anywhere else. Not because the CTO is not smart, because the CTO is not a builder. A real technical co-founder can sit down and explain exactly how the product works, how it will be built, and what the hardest technical problem is without hesitation. I once asked a CTO in a pitch how they plan to build and deliver the solution. The answer told me everything I needed to know in one sentence. I will save the full story for later in this video, but understand this. One answer from the wrong CTO ended that deal before the founder even knew it had started dying. Obsession, timing, team, 3 down. The fourth item on the checklist is the one founders think they understand and almost never actually do.
Checklist item number 4, the last one. And the reason I call this the one founders think they understand is because every founder has an answer. Almost none of them have the right one. I ask every founder the same question. Simple, direct. What specific milestone does this round buy you? And how does hitting that milestone change your entire position? Many founders answer with a number. 18 months of runway, 2 engineers hired, a product launched. That is not a milestone. That is a calendar. Those are not the same thing. A real milestone is a moment of proof, something that once achieved unlocks the next stage, de-risks the next round, and makes the next investor's decision easier. VCs are also reading how you think about money. Do you spend like someone protecting capital, or like someone who has never had to fight for every dollar they burned? The founders who understand capital are not the ones with the biggest ask. They're the ones who can tell you exactly what each dollar does and what it should not touch. If you walk into a room and you cannot answer what this round buys, what proof it generates, and what it makes possible next, you are not ready to raise. Not yet. Obsession, timing, team, capital. That is the checklist. Now, I want to show you exactly what it looks like when 2 of these fail, in the same room, in the same meeting.
I want to take you into a real meeting. Pre-seed stage. 2 founders across the table from me. The deck was clean. The market was real. Everything looked right on paper. But I am not looking at the deck. I am watching the founder. The way he sits, the way he answers, whether the problem lives in him or just on the slides. 3 minutes in, something was off. The answers were technically correct, but the energy was flat, measured, controlled. There was no hunger in the room, no fire. As a founder, I got rejected over and over before I understood this. I know exactly what it costs. And sitting on the other side, I was about to do the same thing to someone else. Then I turned to the CTO. I asked one question. How do you plan to build and actually deliver this solution? Simple, technical, impossible to fake. He said, "We will just hire 2 programmers and I will manage them." That was the answer. That one sentence. The meeting continued, but the deal was already dead. That answer told me the CTO was a coordinator, not a builder. He had no hands-on ownership of the technical problem. He was managing a solution he did not understand. 2 checklist items, 1 meeting. The founder had no obsession, the CTO had no ownership. No deck, no market size, no pitch training in the world was going to save that deal. I'm not telling you this to be brutal.
I'm telling you this because nobody told me, and it cost me years of rejection before I finally understood the game I was playing.
So here is the checklist, the real one. Obsession. Do you have a scar in this problem or just an interest? Timing. Why can this only work right now? Team. Does your CEO own the vision completely? And is your CTO a builder or just a manager with a title? Capital. What specific milestone does this round actually buy? Run your startup against every single one of these right now, not before your next pitch, right now. Be brutally honest with yourself, because a VC will be. And if you are building alone, with or without a technical background, I want you to watch the next video, because the checklist looks very different when there's only one of you. If this gave you something real, something you can actually use before your next meeting, subscribe. This channel exists for founders who value execution over hype, nothing else. The startup world is a ruthless empire game. Many founders fail not because the idea was wrong, but because nobody showed them the rules before they walked in. Now you know the rules. Walk in prepared. See you in the next one.